So let us now discuss an important concept called internal control. So what is an internal control? Let us divide these two words separately. So we have internal, which means within the organization, and control, which means to supervise or to have a hold on something. How does this function within the organization? How does this operate? What is an internal control? So I take an example of company A, B and C, and they want to purchase an asset worth rupees 10 lakhs. Now the decision of purchasing the asset was taken by the management, which directed the purchasing department to purchase the asset, accounting department that actually notes the assets down in the books of accounts, and finally the user department. So what is an internal control is that the decision taken by the management to purchase the asset worth rupees 10 lakhs was actually purchased by the purchasing department first. Now what are the controls in the purchasing department? That the quotations were called for, that the comparative decision was made, and the warranty and everything else for the asset was taken into account. That is the job of the purchasing department. Moving on to the accounting department, it means that properly it was accounted for in the books. Over the period, the depreciation was charged, the suitable rates were selected, and the user department that it uses the asset properly. So internal control does not only mean individual department wise their function, but it also means intra-department. What is the definition of an internal control as defined in the modules of Institutes of Chartered Accountants? Achievement of the objective of the entity. Now this overall achievement of the objective with regards to what all? That the assets are safeguarded, that the functions are properly performed, that the compliance with the regulations are met, and that the reliability of the financial, okay, I'll take the regards to what? So overall objectives regards to what? Reliability of the financial statements, that the functions are properly performed, assets are safeguarded, laws, regulations and bylaws are adhered to. So internal control from an audit point of view holds a very big importance. Auditor has to evaluate how well is the internal control. Depending upon his evaluation about the internal control and its effectiveness during the review period, he will decide about the quality and the quantity of the audit evidences to be collected. Now say for example in a company like this, where the internal control in the purchasing department is weak. For example, if the auditor has the idea that 10 lakh of worth an asset was actually purchased for 9 lakhs and rupees 1 lakh was misappropriated, in that case he will have to do a detailed analysis, he will have to do a detailed in-depth check. So a substantive procedures to be undertaken by the auditor depends upon the quality of the internal control. It is not only in such big firms that the internal control has to be applied. It is also applied in small firms. Places like grocery shops, places like say a cafe, all these places needs to have its own set of controls. So how much evaluation is to be done and what are the procedures to be followed by the auditor depends upon his judgment and his experience. So let us now talk about internal control in a computerized environment. We know that internal control is a process which is established by the management and those charged with governance to ensure that the overall objective of an entity is achieved. But the overall objective of the entity has changed roles considering the globalization of the economy. With increase in the globalization, there has been increase in the scale of operations as well. Scale of operations has led to the increase in the process of the data. So validating every input and the output is not practical for the auditors. So what do we do in such an environment? The roles of computers have increased tremendously. With this increase, we have to ensure that the internal control in the computerized environment of any entity is maintained. Now what could be the possible ways to check? Firstly, the auditors have to ensure that there is a proper login ID and password to gain access to these computer resources. In case if I have an invalid user ID and if I try that invalid user ID in a particular organization, there has to be a prompt over there or there has to be a certain notice to be sent to the higher authorities. Password needs to be changed on a periodical basis. The server rooms have to be kept distinctly and separately with lock and key. There has to be an L1, L2 mechanism in the sense that in case if I want to process a transaction, in case if I want to feed in a particular transaction that needs approval from the higher authority. So these are some of the examples that the internal auditor or the statutory auditor has to ensure the controls to be maintained in the computerized environment. Moving forward, we'll talk about inherent limitations in the internal control. Internal control agreed that it's a process and it ensures that the objective is achieved, that the assets are safeguarded, and that the laws and regulations are adhered to. But in no way does it guarantee that the frauds and the errors, misrepresentation with the frauds and the errors are not going to take place. There always exists a certain amount of risk in the internal control as well. Let me take an example. So what if I have the management of a company involved in a fraud? In that case, no internal control would have a safeguard. So what if the one charged with the authority or the one given the authority to supervise control over the others are the one misusing them, are the one abusing the authority? Again, the internal control will serve as a failure. In situations like where there is a change in the scenario of the business, where there is a change in the structure of the business process, the entire established internal control, according to the old format, will not serve the purpose. Unusual business transaction will not fall within the ambit of internal control, which is generally followed from the usual transactions. Usual transactions are the one that the company undertakes on day-to-day business. Unusual ones are the one that occurs maybe once a year, twice a year. In those scenarios, internal control will fail. Also, the procedure established would of course be like a safeguard for the errors and the fraud. But what about human errors? Human errors are again not falling in the ambit of internal control. So we're going to discuss two other important topics from the point of view of internal control. We have letter of weakness, internal control questionnaire, and internal control evaluation. So what is the letter of weakness? Now we've discussed earlier that the internal audit and the statutory auditors have to evaluate the internal control within the organization. They have to see that the internal control is existing and is operational within the review period. So if they find that the internal controls are weak, they will decide to go about with the detailed audit procedures. Say for example, in our case that we took the asset of rupees 10 lakhs was actually purchased for rupees 9 lakhs by the purchasing department, and 1 lakh was misappropriated. In that case, the internal control in the purchasing department would be weak, and hence the auditor will decide to take the substantive procedures to check in depth the process and the management of the purchasing department. And hence we see that the quality of the internal control, the judgment of the auditors about the internal control have a direct impact on the audit evidences. Poor the control, more the evidences. In any given scenario, an auditor has to be rest assured that sufficient and appropriate audit evidences have been used by him to give him the reasonable assurance about the true and fair picture of the financials. So in our example, when the auditor was not sure or was having a doubt about the internal control in the purchasing department, in such situation, he communicates the facts to the management and those charged with governance. Such a communication by the auditors to the management is nothing but letter of weakness. As the word suggests, it is a letter, it is a communication of the weakness in what? The internal controls that he noticed in a process or in a department. Most of the times, this letter of weakness not only contains the weakness and the department, but also contains the materiality of the weakness and the financials. They would also want to give suggestions about the weaknesses and how to correct them. So in short, letter of weakness is nothing but it's a communication from the auditor to the management and those charged with governance about the weakness in the internal control, and also would contain the conclusions or would contain the solution to those weaknesses. So moving on to internal control questionnaire and internal control evaluation. So you must have heard about the surveys that the people do to arrive at a conclusion about say a particular product. So if I want to survey say Britannia biscuits, what I would do is I would prepare the list of questions relating to Britannia biscuit, go out to the public at large, get my answers to those questions, and then evaluate them to arrive at the conclusion. Such a survey done is no different from internal control questionnaire. Internal control questionnaire is a survey more like a survey I would say, in which the questionnaire, the list of questions is prepared by the auditors. This list of questions is given to the management of the company, who in turn gives it to the employees. Employees answer those questions and give it back to the auditors. Auditors on the evaluation of these questionnaires arrive at the conclusion regarding internal control. That is, they would know how well are the internal control designed, whether or not it is appropriate for a given scenario, how efficiently is it being applied, and whether it is continuously being applied over the review period. Questionnaire generally contains a question about a particular transaction or a particular process, which has to be answered in either a yes or a no. While a yes would indicate a positive reply, a no would mean the internal control is weak or is non-existent. This no would later on be evaluated in depth by the auditors and would fall in internal control evaluation. So internal control questionnaire which does not fulfill the criteria or an answer no actually falls in internal control evaluation, in which a detailed analysis is done by the auditors and then the conclusion is arrived at. They generally make suggestions in this kind of category. I have attached a format for the letter of weakness and of course internal control questionnaire and evaluation for your ready reference. Thank you.